Let's talk about the market recovering. However, I mean, we're seeing some slowdown in activity today. I mean, why are we seeing this slowdown?
I mean, it's an election year, and, you know, there's still, with fixed income instruments, especially with sovereign money market issues as well as sovereign bonds, yields at a 2-3 year high, and you have fund managers, directing new investments into these attractive fixed income instruments. So that largely accounts for the slowdown on the equity markets. And don't forget that it's an election year as well. You have a lot of investors, especially the foreign ones, who sit on the sidelines basically waiting to see what will pan out after the elections. So I'll think that after the elections, you'll see these investors looking at Ghana again and possibly coming back, provided, the valuation levels are attractive.
Well, Kisseih, what's happening over in the financial stock index? I mean, looking at the index, it's up 0.4%. Looking at financial stocks specifically, year to date, not so good. What's your take on the on how the recapitalization exercise going on in the banking sector has affected sentiment for those stocks?
Well, the increase in the last 2 weeks basically is more of an expectation of impressive Q3 results. Like you rightly said, there's been a recapitalization exercise which has been going on for the last 3 years. The central bank raised the minimum capital requirement for banks from 7 million to 60 million in 2008. You have quite a number of these banks who've basically reached the minimum capital requirements, and some have even surpassed. But you have about 8 banks who have not met the requirements, and some of them are still talking to institutional investors, trying to attract them via private placements to make investments in their entities. There are some who are also looking at basically listing, since the central bank has given a reprieve for those who are not able to raise money by the end of 2012.
But I mean, Kisseih, let me just interrupt you there. I mean, some analysts believe that we might see some of them listing on the Ghana Stock Exchange, because the reality is the deadline is coming up at the end of 2012.
Yeah. But you see, with the ones which have not met the new requirements, like I was saying, both the GSC and the central bank are providing a platform that is by listing to be able to meet those requirements. Once you start making preparations to list, you get a reprieve. So you might not necessarily have to meet that 60 million requirement by the end of the year. You'll be given a deadline, which has not yet been communicated.
Right.
But that is, that platform is a reprieve for those who will not be able to meet this deadline by the end of the year.
Okay, well, Kisseih, I want to switch my attention away from the financial sector. What is your outlook certainly going forward for the market? I mean, a lot of analysts see the market rallying during the course of this week, and especially on Ghana Oil Company, which seems to be, sort of leading that gainers list on the Ghana Stock Exchange.
Well, this week, I think activities will be subdued as well. Gold, like you rightly said, was a top gainer last year. And last week, sorry, but it was driven. The price of gold was driven more by higher revenue expectations, following an upward review of fuel prices in the final week of 2012. I mean, there are also improved business volumes in the company's high margin bunkering business, and they're looking at entering into the aviation and mining fuel supply businesses, which are high margin business lines. So that is all what accounted for the impressive performance of gold last week.
Okay, well, Kisseih, I mean, very quickly before we end our interview, give me your take on the fixed income market. I mean, next week we're having the Bank of Ghana issue about 500 million cedis. It's going to be a 3-year bond open to offshore investors. What are your expectations for that?
Well, that issue is actually on Thursday this week, and we expect very strong demand, especially from foreign investors. Demand for government bonds across all maturities have remained very strong this year. This is despite uncertainties related to inflation, potential currency downside, and the macroeconomic policy environment, particularly with regard to fiscal slippages. Interest rates have remained high. I mean, they've risen over 1,000 basis points since the beginning of the year. This likely has explained for the over 300% oversubscription we've had this year for sovereign paper. So we expect this trend to continue. We expect the 300 million, which the government wants, to be heavily oversubscribed, and we expect foreign investors to be active like they've always been this year.